What is up, guys? This is The Broke Executive, and today we're doing part one in a mini-series where I teach you guys everything you need to know about the world of Wall Street so that you can get started in the stock market just like how I did 2 years ago. And that way you too can start your journey of investing and really just jumpstart yourself and being able to prepare for the future. So first and foremost, we're going to have to answer the question, what is the stock market? And this is the part of the internet, mostly the internet. You can still trade stocks in person if you're a group of people who do that, and in which case, yes, you are absolutely on Wall Street. But otherwise, it is a digital marketplace where you can buy and sell shares or portions of a company. In these shares or portions, which I'll talk a little bit more on what exactly they are, is part ownership of a company itself. It's not like buying a pair of shoes from Nike, it's owning part of Nike itself. And the stock market as a whole is the marketplace and the spot where people go to exchange ownership of these portions of the company. So unlike Amazon, the stock market is only open from 9:30 a.m. to 4 p.m. Eastern Standard Time, where in some cases, or in the world of cryptocurrency, which we're not going to be talking about today, you can place an order any time of one. You can be laying in bed, watching Netflix, and decide you want to order something off Amazon at 2 in the morning. You can do that. In the stock market, it's a little different. The market is only open from that 9:30 to 4, and then there is what's known as pre-market, which is hours before the market opens, and then after hours, which is, you can guess, after the hours that the market is open. These range from 4 a.m. to 8 p.m. However, most brokerages, which is the companies where you buy and sell these shares of the company, so that'd be like your Robinhood, your Webull, TD Ameritrade, Fidelity, companies like that, they tend to offer your pre-market from about 9 to 9:30 and then 4 to 6 p.m. Now, there are some brokerages like Webull that will give you access to full pre-market and post-market and after hours. However, this is not a guarantee, and most trading does not happen within these timeframes anyway. The majority of the trading happens from that 9:30 to 4 p.m. Eastern Standard Time. So now that you know what the stock market is at a quick overview and what time of day it is, now you're probably wondering, what exactly are you buying and selling? And way back in the day, before the internet and the world of technology, you were buying and trading physical pieces of paper that state you own portions of a company. And these portions are typically known as shares because it is a fractional share of the company. So it is a small proportion of the overall net worth of the company. And this is typically seen in the hundreds of millions or even billions of shares per company. That's how companies like Apple, that have well over $1 trillion in value overall, you can buy a portion of the company for about $125 as of right now. And these individual portions is what you are physically buying. So when you buy one share of Apple, you are buying one, say, 100 millionth of the company. You can buy multiple of these. That's owning multiple shares of a company. I do that all the time. There's plenty of companies I own 5, 6, 7, 10 plus shares of companies. And that's just my way of saying I want more additional ownership than what one share would be able to give me. This is the stocks that you buy and sell, and that's what exactly you are exchanging. It is a portion of the company. So just to clarify, when I say a portion of the company, I don't mean for Apple, I don't buy an iPhone and that is a portion of the company. I am buying into the ownership of the company itself. So in terms of Apple, you have the CEO, the board of directors, and then there's the common shareholders. That's you, that's me, that's everyone involved who owns part of Apple. We own a small portion of the company, and that is the stock and the shares that we own, and that is what is being bought and sold. So now that you kind of understand what exactly stock is, how you buy and sell it, where to buy and sell it, we're going to be talking about how to identify and find the companies that you want to buy and sell. So right now on screen, I have Bank of America. You can see their ticker symbol is BAC. This is a small abbreviation. It's typically 1 to 4 letters that represents the company name. So there's other companies available. So on the screen right now, I have companies like Johnson & Johnson, Tesla, Disney, Snapchat, Microsoft, Nvidia, and 3M. You will probably be able to guess and figure out which company is which based off their name compared to their ticker. They're often similar, but there's no guarantee that the company has to use letters that make sense. I wouldn't promise you that if you look at a ticker, you know what it means, what the company is. Like for the example, Apple Apple stock ticker is AAPL. However, there's also a company that has the ticker APPL and APLE. Those are two different companies that are not Apple, but at a quick glance, you might be able to get them confused. So I would definitely look into what companies are which ticker, and on most brokerages, you'll be able to type in the company name and it'll automatically be able to find the company for you. You don't have to know the ticker. It's just when you're quickly reading through stats and data, or if you're reading big news articles from financial pages, they tend to include the ticker and the stock price, just so you can get a feel and an idea of what company it is and what it's trading for. There's really no huge reason other than the back end, the software, the coding that helps with the symbol rather than typing out the company name. And it's just quicker and easier to read if everything's roughly the same size. So really, there's not a huge reason why there's tickers versus just company names, but it does allow you to be able to more quickly look these companies up. And it is a bit of a foreign language if you're brand new, but you start learning what companies are and what their tickers are just the more you're involved. Especially companies you buy, you likely will end up remembering what their ticker is. So there's no huge reason about that. So if we were to look now at the Bank of America page I have up here, you can see the current stock price is $37.37, which is pretty convenient. You will also see that today it lost 13 cents during the market hours, and then in the after hours, so after the traditional close of the market, it gained another 13 cents. So over the course of the entire day, the stock price did not go up or down. However, if you look at the green line there, you can see that the stock price has fluctuated, and then that dotted line is where it opened. So that can show you if the stock price is moving up or down. Typically, the color will change based off of which direction it's going. So in the case of Robinhood, if it's going up and the stock price has gained that day, it's green. If it's gone down, it's red. That's more just for a quick glance. You can see what's up, what's down. But in this case, I have it set so that it almost always shows a green line. And you can notice that the stock price does in fact fluctuate. You can look at the different charts down at the bottom. You can see it set to 1 day. You can also set it to a week, month, 3 month, year, or 5 years. And then if you were to scroll down, you would be able to see a little bit more information about the company. So you can see CEO, number of employees, where the company's at, market cap, which is the total amount of all these shares available added up together. And that tells you what the company is worth. So when I say companies with a market cap or companies that are worth, $1 trillion, I'm talking about the market cap. So in the case of Bank of America here, you can see it's $326 billion. And then price to earnings ratio is something a little more advanced in terms of the stock market investing. However, it's not a super hard concept. It's in terms of the stock price, how much are you paying for $1 that the company makes? Now, this means the company has to be actually making money instead of just losing money. But in the case of Bank of America here, for every $19.40 you pay in stock price, it equates to $1 that the company is able to earn. Then dividend yield, that is if the company were to pay out dividends like my Robinhood account is set up for, that means the company will pay out portions of their revenues and of their profits to shareholders for owning the shares. I can talk a little bit about that more in the future, probably in the next video or two, but at a quick glance, that's the main stats there. And then average volume, that is how many shares are traded, so bought or sold in a day. So in the case of Bank of America, you can see there's about 71 million shares that are bought or sold on a given day. Now, I'm sure you're wondering, in terms of price and market cap, is there always a 1-to-1 ratio? And the answer is no. So if we were to hop over here, and now we have Netflix on the screen, Netflix's market cap is $236 billion, so it's roughly $100 billion less. Their price to earnings ratio is much higher at 83. They do not pay a dividend, so the dividend yield is non-existent. But you'll also notice that the stock price itself is $524. This is much higher than the $38 of Bank of America, and that is purely because there is the less total amount of shares or stock available within Netflix. So each stock is worth more proportionally to make up that market cap. There's no set number that a company has to issue for how many they are worth. It's their own discretion. Companies will split stocks, combine stocks all day, every day, as much as they want within some rules. I mean, there's regulations about it, but you don't have to worry too much about the physical price of the share in terms of knowing how big the company is, because companies could be worth, trillions of dollars. And in the case of Apple, like I've been using, that stock price is about $121 right now. Whereas Netflix, which is barely a third of the size of Apple, yet it's almost 5 times the stock price. This isn't something you need to worry about. The bigger thing you want to watch for is the change within that specific stock's price. So is it trending up? Is it trending down? In the case of Netflix here, you can see it was up $18.52 today, which is a 3.67% change. And then after hours, it did go up a little bit further. Most people tend to really only watch what the traditional market hours does. So also included within the stock market is what's known as ETFs. This is something that is very commonly traded just like a stock would, except instead of being from one company, it is a basket of stocks. And then there is a company that is running the account and what is held within it. So rather than buying a share of Apple, you can give that $120 to a company like Vanguard, which has many ETFs on the market, and you can have them invest the money for you. And what they do is they will pick a select number of stocks within certain parameters. So like VOO, that tracks the S&P 500. So they buy companies within the S&P 500 in order to track it and follow its performance. So in terms of buying one share of VOO, you are actually purchasing 500 different companies for the price of that one share. You're not going to own one full share of any of those companies. However, you do get to own a small portion of many, and that gives you the advantage of diversification. I do have a video about this. If I remember, it will be up top right up here for you guys to be able to check that video out if you want to learn more about ETFs and portfolio diversification. And then you can also see just some of the advantages, disadvantages of ETFs, and then their kind of similar brother or cousin in this case, mutual funds. Now, mutual funds are actively managed and you have to put in a certain amount, unlike ETFs where you just buy the share and move on. And ETFs act just like a stock does. It has a ticker, so in the case of VOO, that's the ticker for it. And you can buy and sell it just as you would a share of Tesla. And that's one of the great advantages of ETFs and these index funds and stuff like that. So now that we understand what exactly the stock market is, what stock is, and how to find and figure out companies and their price, now you're probably wondering, how does this make me money? And the quick answer is you buy the share, you buy the stock, and then you wait for the price to change. So to give not an exact real live example of this, however, you can currently see the price of Tesla stock. It's right around $700 today. You can see it did change by about $30 since the day before. And that quick answer is because the price is now up, you can sell it and make money. But because I'm trying to show you guys a more detailed and interesting view of looking at it, I am going to finish covering this topic next week after there's a set amount of time for us to be able to see what happens within the stock price, because honestly, I don't know what Tesla is going to do. Tesla could go up to $800 or it could go down to $300. We don't know. So for this example, I'm going to be buying a share of Tesla. So you guys can see the screenshot right here. You can see exactly how much one share of the company is currently selling for. So let's say, and I bought one of these shares of Tesla. Over the course of the week, we'll be able to see what the stock price is. And then in next week's video, I'll be able to show you guys what the new price is. And if I were to sell that share at that time when I'm filming the video next week, which should be 7 days from now, we'll be able to figure out, did the price go up or down? Did I make or lose money on this investment? So with that, that's really all the information I have for you guys this week. And now I'm just going to give a real quick update and kind of look into the portfolio. You guys will notice my current return over the past year is almost 23%. This is because of the whole drop in the market last year. If you guys have been following this account, yes, this is exactly what we've been seeing and what we expect because of the drop that happened. However, typically you're only looking at a 7 to 8% gain. So I cover this account at least once a month. I show my portfolio. I explain what I bought, any companies that paid me dividends, and I just give a quick overview of how the portfolio is doing. I plan on continuing this series, so there should be at least 2 more episodes where I explain how to make money, and then an actual example where I go ahead and buy shares of a company, which I have hinted at in previous videos which company I might be buying, so feel free to go and investigate for that and let me know if you find out which one it is. And then I also plan on starting to show you guys some of my other investment accounts, my cryptocurrencies, my Webull account where I have my more like fun growth plays as compared to my dividend account, which is the one you guys are used to seeing. And then I also have a Roth IRA account through M1. I'd love to be able to show you guys that and explain the benefits of an IRA. So make sure you stick around, make sure you subscribe to see those videos. If there's one of those videos that I've already kind of mentioned now that you really want to see, make sure you mention it down in the comments. Remember to like and subscribe so that you guys can figure out when the next video is coming. And then if you guys want, I do have a Discord server that you are welcome to join. The invite link will be in the description. And then I also have an Instagram page for this account that will also be linked in the description. If you want to sign up for Webull and deposit $100, you can get 3 free stocks that are valued up to $1,600. And if you sign up for Robinhood using the referral link that is also below, you guys can get 1 free share. And with that, I'll remind you guys one final time to like and subscribe. I will see you executives in the next video.